Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 20th of January 2021. And today is a very, very special day for all of us Ethereans here. After 1,102 days, ETH took its all-time high of 1420, went up to about 1440, and then has come down a bit since then and settling around the 1400 area. But we did it. We broke all-time high. I'm back to tweeting, which is really great. Which feels really good. It feels weird to tweet, but it feels good. All the memes, all the jokes, all the everything over the past couple days and couple of weeks really has been amazing. And honestly, I feel really humbled by the community. It wasn't really about me. It was about the community coming together and rallying around something, that was like a throwaway tweet for me at the time, really. But yeah, it's been amazing to see, and I'm really glad we're back here. I think, obviously I think we're going to be trending, higher than what we are now. We took a long time to get here. 1,102 days is over 3 years. ETH's last all-time high, the all-time high that we just passed before, was set on January 13th, 2018. So we've done it about a week later this time, which is really cool. And, now we kind of enter price discovery. No one knows what happens after all-time high, right? We could go to 10K, right? Could go to 5K, could go to 20K. No one knows what's going to happen. This bull market has already been very crazy. We've seen tons of stuff happen, not just with ETH, but with DeFi as well. The market's more mature. There's more money flowing in. It's just going to get crazy. So yeah, maybe it's something to keep in mind. If you're trading these markets, they do get very, very crazy. And if you've got, ETH that you bought way lower, maybe you're setting yourself some sell targets. I see a lot of people doing that, a lot of my friends doing that, and they're sticking to them, which I think is the right approach. Because if you keep moving them up, right, and you never sell, and then the price comes crashing down and we go into another bear market, you might regret it. So not financial advice, but just some general advice there. But yeah, this feels amazing. You just got to take 24 hours to soak in this feeling. That's what I'll be doing. I'm recording this. It's 12:15 a.m. for me. So I'm going to record this, get this out, get a good night's sleep, and then back into it tomorrow. So let's get into it. Actually, no, I had this first. This is the first tweet I put out when as soon as ETH hit all-time high. There were so many expectations on like what I would tweet, and the expectations were so high, and I had like a few different ideas, and I was like, I could tweet this or this or this, and I'm like, you know what? I'm just gonna tweet this funny picture that 0x Alexander made, who runs the ETH memes account. He made this, and I guess without the beard, the original one. I had my friend add the beard to it, and I just thought it was quite funny. Everyone was kind of saying I was in Twitter jail, so I'm like, you know what? Like, I'll just post this picture with the caption "freedom," and that'll be it. Rather than trying to live up to the really, really high expectations that everyone set. For I guess like the comeback tweet, so to speak. I didn't want to let anyone down or anything like that. So yeah, definitely. It seems to have gotten like a lot of reactions. It was just crazy. People must have tweet notifications on for me at this point. So yeah, that's been really fun. But anyway, let's move into the I guess news from the last 24 hours. So I was on a podcast called Show Me the Crypto. It's a pretty new podcast. They're quite small, but I went on and I basically spoke about, Ethereum, where I see it going, where it's been, DeFi, all that good stuff. I'll include a link to this in the YouTube description. You can go check that one out. It was a great chat. The hosts are really cool. I'm surprised they don't have more of a following. The production quality is pretty nice. And yeah, they're interviewing some really cool people. So definitely go check them out, and check me out on there too. And also, in a few hours from this video, or by the time you watch this video, I will be on Bankless. We did a video covering DeFi season, as they like to call it, and we basically went through every DeFi asset within the DeFi Pulse index, and we kind of like gave our opinions on it, kind of like what we thought about the project, what we thought about the token, and all that good stuff. So you can go check that out. Link will be in the description as well. All right, onto the project updates now. So mStable put out their new Save V2 yesterday. So full disclosure here, I'm an advisor and investor within mStable. I've been part of the project for a long time, since January 2019 actually. So it's been about two years now. That I've been part of it, and I've seen them, kind of grow and work on these products, which I think are really cool. But what they launched yesterday was what they're calling mStable Save V2. So the mStable Save Save product is basically like a savings account. You can put dollars in, you can earn a yield, and it's not subsidized yield with tokens, it's real dollar yield because it uses the underlying tokens and lends them out to lending markets, and you can earn a yield on your MUSD. So what V2 does, it actually tokenizes this yield. So when you put MUSD into the savings account, you get IMUSD, right? Interest bearing MUSD. And this can be used as a normal ERC20 token. You can use it as collateral, you can send it to people, and it always accrues interest on the token, which is similar to like a C token, for example, or an A token from Aave, C tokens from Compound. And then on top of this, they also launched the IMUSD Vault, where you can actually put your IMUSD into this vault and earn MTA token rewards, which is the governance token for the mStable platform. So really cool here. I think these are the sorts of products that are going to bring in the real mainstream, right? These just dead simple savings products that are that pay a really nice interest rate. Like anything over 5%, on your dollars, or even over like 3 or 4% is amazing to people outside of the ecosystem. I mean, we're spoiled, right? And for example, Save V1 was actually paying out on average, I think 20% APY during its lifetime. Sometimes it would be lower, sometimes it'd be higher. Based on various factors, but it was paying out quite a lot. So that's just incredible, right? And I think as more people come into the ecosystem, the yields will obviously come down, but I think they're going to stay above 5% for quite a while, especially with all the yield stacking we can do, whether that's selling tokens to stack the yield, doing like swap volumes, sort of things like that. So yeah, go check out this product. I think it's really cool. I'm not just saying that because I'm part of the project. I really do think this is a really unique and cool product to DeFi that no one's really kind of working on in any real big way. They're not focusing on, and that's what mStable is all about. They want to build this infrastructure that makes it just super easy for people to get into these opportunities. So yeah, go check that out if you haven't already. So the DeFi Pulse Index has crossed $50 million in market cap this past weekend, and DPI holders are now, there's more than 7,600 DPI holders now, which is quite amazing, right? This was launched a few months ago. It's basically an index that tracks the top DeFi tokens. So there's 10 DeFi tokens in there. They have to be, they're not like newer tokens, like Sushi's not in there, even though Sushi's only, pretty old at this point, old for DeFi, I guess. The tokens that are in there have to fit like a criteria. One of the criteria is that the project has to be out for 6 months or more. So that's why you won't find a lot of the newer tokens in there, but you will find the veteran tokens like SNX, Aave, Comp, MKR, all that sort of stuff you'll find in there. And the DeFi Pulse Index has been performing incredibly well during the DeFi kind of boom that we've seen. It actually launched at the end of DeFi summer, so it crashed down to about $60. I think it started about $110. But then, since then, it's gone up to over $200 now because DeFi's come back. So, and because it's an index product, you basically get to capture all the upside of it. By all the upside of DeFi and all the different DeFi tokens by just holding this one index token. You don't have to pick and choose, right? You don't have to try and catch pumps and sell and incur all these taxable events. Not to, I mean, the DeFi Pulse Index, from my knowledge and my account that I've spoken to, is supposed to be tax advantaged, where you're not taxed on the rebalances, which are done automatically each month. But consult your own tax professional for that. I'm in Australia. The laws here are probably different to everywhere else, so don't take my word on that. I am not a tax advisor, but in general, it's just like a much better automated product for people to get exposure to DeFi. So yeah, definitely really great to see this growth here. I think we're going to see the DPI grow to $1 billion in market cap by the end of this cycle. And the best thing about the DPI is that whenever new DPI is minted, it actually goes and takes the underlying tokens off the market. So it's not like a synthetic asset where there's synthetic indexes out there that actually don't buy the tokens off the market and put them into a vault. They're just like tracking the different tokens in the index. Whereas the DeFi Pulse Index does both, right? It tracks the growth of the underlying tokens, but it will also buy them from the market essentially, or take them out of circulation. So really cool there. But anyway, if you want to learn more about the DeFi Pulse Index, I mean, I just mentioned that I did a video with the Bankless guys on this that's coming out soon. So definitely go check that out once it's out, because we do dive very, very deep into the DeFi Pulse Index and all the tokens within it. So Curve has actually put out a preview of a new UI that they're looking at, using. I'll load it up here actually because it was quite a I guess departure from their other UI. So you can see it here. For anyone who's seen the traditional Curve UI, it's very retro, right? It's very 90s. And a lot of people have an issue with it. I actually personally really like it, but because this is DeFi, anyone can build an interface on Curve. Or any other smart contract. So, someone could build this interface, and it doesn't have to be the quote unquote official Curve interface, but you could use this if you wanted to. So yeah, this is like a preview of it here. It's obviously a very, very different interface to what Curve has at the moment, but I think it appeals more to, I guess, probably not like the complete normies, right? But like it's more friendly to newer people within crypto and within DeFi. Whereas the Curve front end right now is definitely not friendly to those people. And it's kind of, I guess, complicated for them to follow along with. So yeah, really cool to see the community putting this stuff together. So Hayden Adams from Uniswap today announced that Harvard Law, BFI, which is I think the blockchain and fintech institution at Harvard Law, are now a delegate in Uniswap governance. So they are someone who you can delegate your Uni tokens to participate in Uniswap governance, which, I mean, this is really cool. And as Hayden says here, this is the 4th academic group to get involved after Berkeley, Stanford, and UCLA. So, Uniswap governance is actually attracting these, I guess traditional respected institutions to be part of their governance process. And this is just crazy. Maybe it gets to the point where all the DeFi protocols basically do this, right? Where they're governed by the users delegating their stake to these kind of institutions that can actually work full time on this sort of stuff. Maybe that's how it goes. But yeah, I think it's really cool to see. I think it's always good to see people outside of, and this is called the Harvard Law Blockchain and Fintech Initiatives. But it's always good to see kind of institutions that we don't normally see within the Ethereum space, within the DeFi space, getting on board, jumping on board and kind of having a play around with it and becoming, Uniswap delegates. That's really cool. So yeah, really, really great to see that. And also, Hayden also tweeted out that $500 million worth of Uni has already vested to the Uniswap governance community treasury out of the $4 billion total, which is based on the current price of Uni. That is a massive war chest, right? That is absolutely huge. $4 billion is the amount of money EOS raised to build an entirely new blockchain. I won't go into what they did and didn't do with that money, but or if they actually raised $4 billion, there's some kind of skepticism there. But this is fully on-chain verified that this money exists. It's in the community treasury. Uni token holders get to decide what happens with this. And the fact that they've already got $500 million to play with is crazy. To put that into context, that's how much the Ethereum Foundation has, even at ETH's current price. They had more ETH than that, but now, they've got $500 million worth of ETH left in their public address the last time I checked. So that's to build Ethereum, right? ETH2, funding all the teams around it, doing all this different stuff. Now, Uniswap, which is an extremely Ethereum aligned project, has this $500 million worth of Uni that doesn't just have to go to things in the Uniswap arena. It can actually go to anything. And, Uni token holders are very Ethereum aligned. So what do you think they're going to put this money towards? Ethereum things. We might see them fund, massive Gitcoin grants rounds. We might see them fund all these different public goods, fund different teams, be incubators, be basically a VC fund out of it, be a hedge fund, do yield farming. And there's so much you can do with these treasuries. It's just insane. And the fact that it's so large just means that Uniswap is always going to have funding now. It remains to be seen how the governance plays here, and how how slow it moves or how fast it moves. But we're going to see more and more of these massive treasuries pop up within these DeFi protocols that are going to be used to improve them. And as I said, Ethereum aligned projects are the best projects to have this sort of money because it's going to be spent in the right places, or it's highly likely to be spent in the right places rather than chasing things that don't exactly make sense. So yeah, I think, I've said it a million times, but $500 million is a lot. And that's not even the final amount, right? $4 billion is going to be the final amount at current price. And I actually expect Uni to go up in price. I don't hold any, but I do expect it to go up in price because of, things like the Coinbase IPO. People are going to look at that and be like, why is Uniswap not worth as much as that when Uniswap is doing as much volume? And Uniswap in general, like they've got V3 coming. They're going to keep growing. It's just going to be insane. So yeah, basically massive kind of things coming to the Ethereum space in terms of treasuries, and I can't wait to see how it plays out. So Alex Stokes put together this blog post today after, I guess, the last 24, 48 hours. Ethereum miners have started coming out of the woodwork, so to speak, to talk about EIP 1559 and how they're against it. Now, obviously, they're against EIP 1559 because it cuts into their revenue, but I do want to make one thing clear. EIP 1559 is the fee burning EIP, right? It doesn't burn the entire fee. It burns what's called the base fee, and then anything paid over the base fee in what's called tips to miners is not burnt. Now, the majority of the fee, depending on the network load, will probably still go to miners, right? There'll be fees burned, but the miners are still going to make a lot of money. So in this thread, kind of Alex goes through that, and I'll link the thread in the description. I won't read all of this, but at this point, I mean, miners, the way I think about miners within a blockchain is that they're service providers, right? They are one part, I guess, of the overarching Ethereum governance process, but I think they're one of the quieter voices because they exist to obviously keep the network running, but they're paid for their work, right? They're paid in block rewards, they're paid in fees, and right now, considering that the fees are so high, they are making an absolute killing right now in terms of revenue, and on an adjusted basis, I'm pretty sure they're making more than Bitcoin miners if you adjust for prices there. So they should really just, I mean, I kind of like I got a little bit kind of like I was looking at Twitter. I was like, why? I understand why they're complaining about 1559, but like, how greedy can you be? Like you guys are already making so much money with Ethereum mining, right? And you've known EIP 1559 has been coming for a while, and you also know ETH2 has been coming for a while, and that proof of work is going to be deprecated. So just make the most of what you've got now. Don't try to push your luck, so to speak. And I'm not to say that I hate miners or anything like that. They're a pivotal and crucial part of the network, and they've been around for a while. They were very important early on, especially, right, to bootstrap the network. But at the end of the day, they are one of the only parties, or really the only party, getting directly paid for their work within on the Ethereum network, right? The core developers are paid out of the tokens that were allocated to the Ethereum Foundation at the Genesis. But once those tokens run out, right, and they will one day run out, that's it. Whereas miners and then stakers, they get paid from the network itself, right? So they're making money, and as I said, they're the only real group that's getting paid by the network directly to basically participate in the network. So they should really be happy with what they've got for now. Maybe some of you watching and listening are miners, and as I said, I have nothing against you personally. I just think that the miner role is very specific within these networks, and it needs to stay in that specific kind of arena. And when you start venturing out and going and trying to like have like a more of a say in governance on things that maybe hurt your bottom line, in theory, but are much better for the network, right? Based on what we know, then you're probably not gonna win that argument. So we'll see what happens. I have a lot of strong feelings here. I do still think 1559 is going through. Miners, as I said, have known for a while that proof of work is getting deprecated on Ethereum once the ETH1 to ETH2 merge happens. They've known about 1559 for over 2 years now. I just don't think that they cared too much about it when the fees were lower. Now that the fees are higher, they care more. And maybe some of them don't even understand that 1559 doesn't burn the entire fee. It only burns a portion of the fee. So really great blog post and summary thread from Alex Stokes here. I'll link it in the YouTube description. You can go check it out yourself. And on that topic, Tim Byko put out another State of 1559 update. I'll link it in the YouTube description, of course. I won't speak to too much about what's in here. It's just a bunch of updates about, what's been going on with 1559, what the progress is. He links to Alex's tweet thread and blog post here, of course. So yeah, I'll link that for all of you to go check out. But definitely read these updates. They're very important. If you're interested in 1559 at all or Ethereum core development at all, then that is what you need to read. I mean, I spoke about the ETH2 newsletter yesterday from Ben Edgington. This is the equivalent of that for 1559. So definitely go check that out. If you're running the Prism client in your ETH2 setup, they released version 1.1.0, which included several significant changes. So definitely upgrade this if you're running Prism. If you haven't already, this will be in the YouTube description for you to check out. But yeah, anytime that there's an upgrade and they say that there's several significant changes, it's always a good idea to update. Maybe you want to wait a little bit to see if there's any kind of bugs. You don't want to mess around. You don't want to maybe accidentally get slashed or something, but you shouldn't, right? These teams, when they ship out this stuff, they know what they're doing. So definitely go upgrade your Prism client if you're running Prism. Ryan Watkins from Masari put out this incredibly bullish tweet today, just before ETH hit all-time high, I think. So he says that Ethereum's daily transaction volume is going parabolic. It now settles $12 billion in transactions daily, which is $3 billion more than Bitcoin. And he goes, imagine not being bullish on ETH. I mean, right? Imagine not being bullish on ETH when this is the kind of growth that you're seeing. Ethereum has been settling more value than Bitcoin since July of 2020. And as you can see from this chart, it doesn't seem to be slowing down at all. I mean, I've been through this before on the Refuel, right? I've written about this so many times. I've tweeted about this so many times. I'm like a broken record at this point. But this is staring you in the face, right? This Ethereum, the fact that Bitcoin's market cap is larger than Ethereum by so much, I think that gap's going to close, like, going forward. I really do, because it doesn't make much sense to me. If ETH, you can argue, and say, ETH doesn't directly capture the value of all of this, blah 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 blah. But neither does Bitcoin, right? The value settled on the Bitcoin network and the fees settled on don't go to Bitcoin holders, right? But Bitcoin's still worth a lot for various other reasons, and I think Ether is going to be worth a lot for the same reasons and more. So yeah, I mean, I always love looking at this chart because it just shows that Ethereum has flipped Bitcoin on so many different metrics already. That it's so undervalued for what it was. I mean, now that we're getting up to all-time high, we're slowly coming into like where I think ETH should be, especially on the ETH BTC ratio and stuff like that, considering how much is happening on Ethereum. But if you were paying attention over the past year and you saw just how undervalued Ethereum was compared to Bitcoin, you've had a very good past year, or even like the past two, maybe 3 years as well. You're having, a very good time right now. So, and this is a drum that I've been beating for a long time. The Ethereum network can do more than the Bitcoin network, I guess like by design. And that's why it can settle more value. It can do more things like, you have DeFi, DAOs, NFTs, all that good stuff. Whereas Bitcoin, you just have moving Bitcoin around, right? And you can actually, your Bitcoin on Ethereum is actually way more powerful than your Bitcoin on the Bitcoin network. So really, we might see a lot of that volume come over to Ethereum for one reason or another in the future, or on Ethereum layer 2, for example. That's going to be very interesting to see, right? It's kind of a narrative disruption there, or a narrative violation, so to speak. So we'll see how that evolves. I'll keep you guys up to date on how far Ethereum gets from Bitcoin here. I think it's a very great metric to look at. And yeah, I'm obviously incredibly bullish on ETH, right? But yeah, I'm the same kind of mindset as Ryan. Imagine not being bullish on ETH. I just don't get it. How can you not when you see all these metrics? And this is just the space we're in, right? The people paying attention, people knowing, what they're looking at are the ones that kind of reap the benefits here. So, I mean, just following along with anything got to do with Ethereum, whether that's through various media, not just the Daily Gwei, but through Bankless, ETH, the Defiant, DeFi Dad. I mean, there's so much Ethereum media now. You can kind of follow along with all this. They give away so much free alpha that it's kind of like, if you are following along with it, you have no excuse not to be bullish on ETH, basically. So yeah, just wanted to kind of talk about that a little bit, and we'll keep tabs on it for sure. All right, last thing was this video from Taken's Theorem on Twitter, which I thought was really cool. So if I play this video for you, and only those watching will be able to see this, but basically if I play it, it shows the Genesis block, and then it shows the explosion of the addresses that came off the Genesis block, and all the other blocks and how the addresses interacted with each other and everything like that. This big blue dot is the Ethereum Foundation's address, I'm pretty sure. And then you have a bunch of other addresses, of course, everywhere. And this is like to today, basically. Now, I wrote about this in the Daily Gwei newsletter, but this looks like a big bang to me, right? It's like the big bang of the Ethereum network. We had an explosion at Genesis, and then we had all this stuff pop off, right? All these addresses pop off. And then since then, we've had this entire ecosystem, this universe develop so rapidly over the past few years. And now we're basically in like escape velocity territory where no one can keep up with what's happening. I mean, I do a daily newsletter, daily kind of YouTube video, weekly newsletter on ETH, spend all day, looking and reading and everything. And I still miss things, believe it or not. So yeah, at this point, the Ethereum network has blown up to basically be a universe that is impossible for one person to keep up with, which I think is the most incredibly bullish thing to happen outside of anything. The fact that Ethereum has grown so much that one person can't keep up with it is more bullish than anything else. So yeah, really great to see that. I really liked this kind of visualization here, because it really does look like a universe being born, and it kind of like got my brain spinning. I was like, wow, Ethereum really is this universe, right? With not just applications built on it, but all these people interacting, smart contracts interacting. It's amazing. I really would love to see more visualizations like this. So yeah, going to be keeping an eye out for that for sure. All right, everyone, that's it for today's episode. I hope you enjoyed it. If you haven't yet, give the video a thumbs up, subscribe to the YouTube channel, subscribe to the Daily Gwei newsletter, join the Discord, and hopefully by tomorrow, ETH's back over its all-time high and above it, right? I mean, as I said before, we touched it and came back down, but hopefully we're well above it in tomorrow's episode. So yeah, thank you everyone, and I hope you enjoy your day.